you. Have you ever taken a trade that looked so perfect? Price breaks out and you enter, and then suddenly the market reverses and it stops you out. If that has happened to you, so this video is going to change the way you see the market forever. Today, I'm going to explain institutional trading logic in the simplest way possible. I promise, no complicated jargon, no hype, just how price actually moves behind the scene. Then by the end of this video, you will stop asking, where is price going to? What am I going to do? And you will start asking the right question, which is, where is the liquidity? Where is the liquidity? That's the right question to ask. Where is the liquidity? Sitting in this chart that you're looking at. So let's get in and explain more. Yes, we need to understand something very important actually. There are two major participants in the market. You are not the only participant. And then we have what we call the retail traders. We have the institution traders. The retail traders, where we belong to, like the individual traders, the small companies, and everything. That's the retail trade. Doesn't matter how much that you've put into it. Why the banks, the hedge funds, the large capital traders, those are the ones we refer to as the institutions traders. So, but then when we look at the retail traders, we classify them as those who trade small portions, like they trading, scalping, week trading, and all those stuffs. And most times, the retail traders they react emotionally, and then most times they chase the breakouts. Why the institutional trader actually they trade massive capital. They use massive capital, not just the way we trade, and then they plan weeks ahead. They need liquidity to enter and exit the market. Also, we should also know that price move strategically. Price don't just move the way we think it is. And here is the key. Remember, the institutional traders, they don't just click the buy or the sell like the retail traders do. If a bank wants to buy, if the banks, they want to buy a billion worth of assets, they actually need someone on the other side who is ready and willing to sell, or who is selling that particular asset. And that someone is actually the retail traders. That's where the institutional logic begins, which is the topic for this particular teachings. So we say the institutional trading logic is actually the strategic method large players use to, one, they use it to accumulate positions. Two, they use it for manipulate price temporarily. Then third, for distribution for profits. So price does not move randomly that like most people think. No, it does not move randomly. Price move towards liquidity. That's why we said the right question to ask is, where is the liquidity? And then you might ask yourself, what is actually liquidity? Liquidity is simple where stop losses and pending orders are sitting. Let's think about it this way. Think about it. So where do most traders, retail traders, put their stop losses? That's the first question you ask yourself. Most times we put our stop losses above equal highs, old highs, and then we put, because we call those areas probably resistance or support area. That's what we are being taught. And then we put it below equal lows or old lows because it's our support zone. We think price will not get to price, have to, this area have to support the price. And then we put that above the resistance or the support, just like we said. These areas become targets. Why? Because stop loss, just like we said, stop losses and others are there. Then and others provide liquidity. Those areas provide liquidity for the institutional traders. And liquidity allow institutions to enter large trade efficiently. So price move to liquidity first, then it moves to its real destination. That's what is happening in the market. So let me break this down into three steps mode. The first one is the accumulation. This is where institutions quietly build positions. Price often moves sideways. Retail gets bored when price is moving. You don't really know the direction. There's no clear direction. That's the accumulation phase of the institution. They are building their orders. The orders are there. Then, but institutions, they are preparing while you're like, oh, the retail trader, I don't really know the exist. So they are preparing. They are building their orders there. Why the manipulation mode, the manipulation phase? This is where this is the part actually that tricks most traders. This is where we get trapped. The part that tricks most traders. Price suddenly breaks out. It sweeps the equal highs, it sweeps the equal low, or the previous high or the previous low. And then retail traders think, oh, this is the move. Then we jump in. Hmm? Well, but what's actually happening? Liquidity is being collected and stop losses are triggered, orders are filled. That moves us also to the third phase, which is the distribution. So once institutions have their full positions, price moves strongly in the true intended direction. This is the clear trend everybody wishes that they caught, but you see, we haven't stopped out. But most traders, retail traders, are already stopped out during manipulation. That's not coincidence. That is structure. So let me give you a simple analog on this. Think about this. Imagine a wholesaler wants to buy 10,000 apples. They cannot buy them all at once at a cheap price unless people are selling and willing to sell. So what do? They need fear, they need panic. So once people panic sell, then the whole sellers accumulate quietly because that's what they've been waiting for. So market work the same way. Fear creates liquidity in the market. Liquidity allows large players to operate. That is what we call institutional logic. I hope that is a bit more clearer and more understanding. So let's look at it this way. So once you understand this, everything changes for you as a trader. That's the reason I'm doing this, trying to make it as simple as possible so you understand it. So instead of trading breaks out blindly, you start asking the right question. The questions you will ask: where are retail traders trapped? Where are stop losses sitting? Has liquidity just been taken? Are we in accumulation or manipulation or distribution phase? When you know this, you know exactly what you're doing. So you stop reacting. You start anticipating. You stop chasing price. You wait for liquidity to be taken first and price to come to you. This alone, if you can start practicing this alone separates struggling traders from consistently improving ones. We learn every day. I hope this video has been insightful to you. So if this video makes sense to you, here's what I want you to do. Don't just watch, don't just listen and get away. Go back to your charts. Mark equal highs, old highs and lows, equal lows, the obvious supports and resistance zone that we normally look at. Then watch how often price sweeps those levels before making the real move. That is institutional logic in action. So if you find this video insightful, if you find it helpful, if you find it very helpful, like it, subscribe it, comment liquidity below so that I will know you are serious about learning. And in the next one, I'm still going to bring something else that will be very helpful to you, like liquidity sweeps, real charts step by step. Oh, then remember this: trade smart, trade with the logic behind the markets. This is liquidity narrative. I will see you in the next one. Thank you.